I have a mental block when it comes to pair trading. Please give me some real-life examples that show clear examples of when to sell stock and buy another using some combinations of stocks, Tesla, MicroStrategy, CleanSpark, Google, etc. So this is a fun one too. And just so you know, my background part, financial risk management and FX currency hedging, I've been doing for more than 33 years at this stage, probably 34, which is kind of terrifying. So I think in pairs. And I always say everything is a pair as we go forward. So I'm glad people are beginning to think in pairs. So I'm going to start at the beginning and go all the way to very advanced, okay? So bear with me on this little tiny journey. First of all, everything is a pair. If you swap, if you buy, swap, buy, same thing in my vernacular. If you buy Bitcoin for US dollars, you are swapping dollars for Bitcoin. That is a pair trade. So here in this little chart, back in Christmas or a little in November, you pair trade $15,500 for one Bitcoin. And then 6 months later, you pair trade it back for $27,000. That's a simple example of a pair trade. So that's how you adjust your head. Everything is a pair, no matter what currency you're in, etc. Nothing on this earth is not a pair. Next, let's look at a baby example, Alphabet and Google. Google and Microsoft. So here is the two of the largest technology companies in the world. Their stock prices are highly correlated, meaning that they move in the same direction. And this makes them ideal sometimes for pair trading. But remember, in, I think, January 2022, before they split, it was like, I think Google was trading about $2,000 per share, and Microsoft was trading about $1,500 per share. And many people believed Alphabet, Google, was overvalued compared to Microsoft, and Microsoft is undervalued. So you find that kind of arb in between. So what we're looking at here is the Google divided by Microsoft. I'm getting all my stocks confused here. Price, and you can see way back as of late 2015, the pair was worth about 0.72. Now the pair is 0.38, so it's halved. That's not good. Also, I added the red line there that shows you the 200-day moving average of this pair. And typically, when you look at 200-day moving averages for things that are kind of correlated, they'll spend half the time under the 200-day moving average and half the time over for pairs. So it's very good to have that as a rough indicator of where they live. And right now we're currently under, but Google just took a pounce. And one of the reasons it's been quite weak lately is because many were afraid that Microsoft was going to eat Google's lunch. I could talk about that for a long time, but you know my sentiment on that. I don't think they can. And we're already seeing Bard doing so much more than ChatGPT, with a very different approach with real-time data. And even the All In podcast crew believe what I said a month ago, that I believe there's no way that Microsoft will eat Google's lunch. So that's second example. Third example is Tesla over Google. Here we'll look at the simple chart. It's gone from a score of 2. So basically you could get 2 Google shares for every Tesla share. And now it's at 1.42. And the 200-day moving average is 2.03. So that is a stunning turn of events, ladies and gentlemen. So what this tells me, all right, like even just think of it as a very fundamental exercise. Which company is growing faster? Which company is growing revenue faster? Which company is causing the most disruption on earth today? Which company is about to kill a ton of legacy industries? And then you have Google. So this tells me, in my mind, from a pair, Tesla is extremely undervalued. So that's how you kind of use this. Let's go one more example. No, 2 more examples. So we're going deeper and deeper and more sophisticated. This is the ARB cloud, when you use a pair to identify arbitrage opportunities between co-integrated assets. This is MicroStrategy and Bitcoin, for example, or it could be a miner like CleanSpark and Bitcoin. And again, we've built a tool that calculates the ARB for you, so you don't even have to bother with the math. And everything mean reverts. So you just get into the kill zone, under the cloud, and you swap back over the cloud. And next is our PTOS, which are the most advanced pair trading tool yet to hit the market, coming tomorrow to customers. Now, this is kind of next level. This is advanced pair trading, but it's for inversely correlated pairs. I want to make sure people understand that things that are inversely integrated. So if one stock goes up, the other one goes down. If the other one goes down, the other one goes up. Very important. So an example here in this chart is Tesla versus Teslac, which is the short Tesla stock. So basically it does the inverse of what Tesla does every single day. So at the bottom of this pair, you'll be notified when to buy. So you buy Tesla and then you short the Teslac. Okay, so you can play both sides of the trade at the same time to amplify profits. And then at the top, when it says sell, you sell Tesla and you buy Teslac. And this way, if you're right and the model has a full back test, and it'll tell you if you want to do this only when you get 80% certainty based on your charts and your settings in the model, and then you can amplify your profits. And it also works for people that don't use options, etc. So that's kind of like the simple path of 5 different examples of pairs.